Hi everyone, welcome once again to our YouTube channel. In this video, I will explain understanding complex pullback and retracement along with top-down analysis in the market. And I want you to watch my screen as I'm going to explain what we mean by complex pullback. For instance, as you can see my dashboard, we have a bearish market, like this is AI. Lower high, a lower low, another lower high, another lower low. So you can call this, maybe this is a weekly high. Then this is also a weekly low. So this is going to be a weekly lower high, a weekly lower high. Then this will be a weekly lower low. Then this will be what? A weekly lower high. So if a weekly is bearish and a daily of 4 hours is bullish, then we should know that the daily of 4 hours is just a retracement of weekly to the imbalance or SOB order block or point of interest. So when you are buying a retracement, you have to know when to take your profit quickly, because it's just to retrace to the other block and the trend will continue. So, and then what did I say? I said if weekly is bearish and daily and 4 hours is bullish, then you should know that the daily of 4 hours or 1 hour is just a retracement of weekly bearish market to the point of interest or the other block. So, and you have to know when to take your profit quickly. And one thing you should know, one thing you should consider about a trend continuation, one thing you should consider before trend continuation consider trend continuation. One, you must consider the other block or imbalance, other block or imbalance. One, two, that's a fair value, fair value gap, fair value gap with it. So you have to consider the other block or imbalance. One, then two, fair value gap. So if the other block not build up, then there is a high chance that the market will retrace the, you get it? So if the other block and there's fair value gap has not been tested, there's a high chance that the market will surely retrace to that place. So you have to consider this. We have to consider this before trend continuation. Is extremely important, and is one of the things that should guide you when you are tracing a retracement. When you are tracing a retracement. So another thing is that let me try to explain this thing again. When you see a low, a high, a low, you see something like this, just watch. I'm going to explain it. And the market retrace a little, it gave us another lower high, it gave us another lower low, it gave us another this. Then the market came back, then continued to go up. So, and the market now retrace. So let me draw it. Let's say this a high, then this a low, this a lower high, then this a lower low, then you can call this break of structure. Then what are you going to call this? Higher high. Why? Because this has been broken. This lower high is broken. So what are you going to call this? So you call this what? So you call this higher low, lower high. So what are you going to call this? Lower low, right? And you call this lower high. And what are you going to call this? Lower low. But let me explain something here. If you notice this, the market retraced to this other block. If you notice, so but the market has given us what? A break of structure. And what did I say? For you to confirm a bearish or bullish market, you need two higher high and two higher low. So what happened was this is a high, this is a low, this is a lower high, and this is a lower low. The market retraced and break this structure and give us higher high, right? But the market, there's an other block here with fair value gap here. This is a fair value gap, and this is another block. So the market retraced. So this is what they call complex pullback. All this like this, they are complex pullback. Why? Because maybe this is a bearish, this is a weekly or a daily, let's say this is a daily higher high and a daily high, daily low, daily low. So what happened was on a daily, the market has broken the structure. But maybe on 1 hour or 4 hours, it's showing us a bearish market. But what did I say? On daily, until when this is broken, we can't consider it as a break of structure. So this is what they call a complex pullback. When there's another structure in that another structure in a particular time frame inside, let me say a lower time frame has another structure, and whereas a higher time frame has another structure. So what you're going to do is for you to go and analyze a higher time frame and know what the market is telling you. So until when this is broken, you can't consider this as a break of structure. So if you are selling this particular market now, you should know that you should take your profit when the market is around the imbalance and the other block. Because once the market gets there, it might continue to grow up. And what happened? The market came to the other block here. This is the other block and continue to grow up. So this is another what? Another break of structure. So on daily, the market is already confirmed that this is what? This is a bullish market. It's no more a bearish market, because this is and what I say a bullish market is? I say a bullish market is when the market is giving you a series of higher high, higher low, higher high, higher low. So this will turn to what? Higher low. This will turn to higher low. This will turn to higher low. Why? Because it couldn't break this. It came to this other block and what? It went up and it was what? A higher high. Let me show you on a particular pair so that you can understand it better. So yes, as you can see my screen, this is NZD USD weekly, and if you look at my screen, this is, sorry, excuse me. If you look at my screen, this is, I can call this AI. Okay, I can call this AI. I can call this a low. We are just taking the market from here now. So what am I going to call this? A lower high. Why did I call this a lower high? Because this is a high, this is a low, this is another high, but this high is lower than this high. So this is a lower high. Then what happened? Market came and break this. So I'll call this what? A lower low. But the market retraced and gave us what? Another lower high. Are you getting me? It gave us another lower high. Then what happened here? The market came down here and gave us what? Another lower high. But it did not give us what? A lower low. So we call this what? Higher low. So inside this circle now, there's another structure here. So let's go to let me see. Let's go to, can you see the dates starting from, okay, let me mark like this. Yeah. So let's go to 4 hours. 4 hours. Okay. Let me clean this. So can you see my screen? Yeah. Can you see my screen? So if you look at my screen now, this is, yes, this was the weekly I marked. Can you see it? It was the weekly I marked. You know, I said this is a high, a low, a lower high, a lower low, a lower high, a higher low. Why? Because I was expecting the market to break this, but it came and gave us higher low, then retrace again and give us lower high. It couldn't break this, so there's no break of structure in both sides. So, but there's a structure here. This is weekly. Then I went to daily. I went to 4 hours. So on 4 hours, the structure is different. When you look at it, this is. Can you see my screen? This is a low. This is a low, and this is a lower high. Then the market came, retrace, and give us what? Higher low. This is higher low. This is what? Higher low. Then came here, give us what? The market came. This is a low. This is a lower high. This is higher low. The market came and break this. So this is a break of structure. So we call this what? Higher high. So what happened? The market retraced. And came to what? And came to this other block with fair value gap and give us what? Another higher low. Another lower low. Yes. Can you see? It broke this. So we'll call it lower low, break of structure, right? Then what happened? The market, we expected the market to, no, it's not yet confirmed already because it's called a complex pullback. So we expecting the market to come here and give us what? And give us another lower low. So that we can continue the trend along with weekly. Then what happened? The market came and break this. So this is what? A break of structure. So a break of structure. So 4 hours is bullish, but weekly is bearish. 4 hours is bullish, weekly is bearish. What did I say 4 hours is bearish? This is a low, this is a lower high, this is higher low, this is higher high. The market came and break this structure and give us lower low. But under 4 hours, we are not sure whether the market will continue because it didn't break this. Assuming it broke this, can you hear me? Assuming the market came down here and break this, then we will know that yes, the market is going downward. But the market, what happened was the market came and gave us. It didn't break this, only break this higher low. It didn't break the real lower low, and the market retraced and break this. So I know that yes, the market is what for under 4 hours is bullish. But what I know that I have to take my profit as soon as possible because the market might keep on what going down because weekly is bearish. So what happened? The market came down here and gave us what? And gave us higher low, then came and gave us what? And give us another higher high. So when the market is coming here, this is when I'll be looking for entry. So I'm going to teach us how to take entry from here later on. This is when I'll be looking for entry. Why? Because I can see some liquidity grab or cash grab or money in the market. So this is where I'll be looking for market. Then what happened? The market came here. If you look at it under weekly, the market came to what? Came to this OB. The market came to this OB. It came to this, it came to this King OB. There's what they call King OB in the market. There's what they call fair value gap. So the market came to this King OB and continued to go down. Can you see? And continue to go down. So in this pair now, this is what they call a complex pullback. While the market under 4 hours, it was bullish, but weekly is telling us that the market is bearish. Why? Because we can see a high, a low, a lower high, a lower low. Can you see it? So there is already lower low, two lower low. So this is when you need to be very careful. Then if you look at this also, when the market finally break this, giving us another lower low, So what happened? The market came. So what happened? There's another structure here under daily. Can you see? This is a low, a lower high, higher low, higher high, higher low, higher high, higher low, higher high. Can you see it under daily? Then in 4 hours, can you see another structure? A low, a lower high, higher low, higher high, higher low, higher high, higher low, higher high. So when you are trading a complex pullback, the two things you need to understand is just look for a order block and a fair value gap that is yet to be filled. So make sure that the market comes to that place. Then if you are in that particular trade, you can close your trade, or you should be looking for entry. So one of the places to look for entry is a, when you see an order block and imbalance, then you can continue what you can look for a trade. And if you look at it, let's say you take position from this place right here now. Let's say you take position from this place. Let's say you take position from this place right now, and this is like, let's say 90 pips, 90 pips, let's say 90 pips, let's say like 90 pips, sell loss, 90 pips, then the market drop about 12,251, 12,251 divided by 90 pips. That's like 13%. So understanding complex pullback and retracement and when to take position in the market can give you a very good risk reward. So please kindly rewatch this video as many times so that you can understand it clearly. And if you are yet to subscribe to our YouTube channel, kindly do so that you can follow us, because I'll release another information on when to take in